trades that you'll see. And obviously the outcome from that trade has gone incredibly well for $2,000 a contract, guys. And I did say, Paul, if you didn't get that trade, you're a fucking moron. Or words to that effect. Obviously, I used slightly stronger language than that, obviously, at the time. But yeah, words to that effect. You know, because you need to get these trades. You need to get these trades. Otherwise, you're not going to have a desk to come back to. When you get that call to come upstairs, you know what's going to happen. There's somebody at your desk getting all your stuff into a box. And then you've got the walk of shame out the door. And everybody has a little chuckle to themselves and says, that guy never got that gold trade. That guy never got that gold trade. What an idiot. As you walk the walk of shame and you say, can I still get a reference? And you walk across the street and you get a job at Merrill Lynch. Yep, that's what happens. It's just good process, isn't it, guys? Good process. Now, I know that, I mean, when I'm talking about pack your bags and all that kind of stuff, guys, I'm talking about institutional traders. I'm not actually talking about you guys. There's limitations, and I know this is me obviously projecting my softer side, and and I know you guys think I don't have a softer side, but there are limitations as retail traders. You do have other things. You've got, Jack was talking about having to, put his socks away earlier on today, and that's why he missed a trade. We know there's limitations to the retail traders world, that sometimes you've got to be putting your socks away. Sometimes you've got to talk to your partner every now and then, right? Sometimes you've got to go and have a coffee. Sometimes you've got to take a phone call, answer the door. But the challenge you've got is that you can't get agitated about those trades. You can't get agitated if you did miss it because of that reason. I can get agitated because of the fact that if I've got a professional trader on a professional desk doing that trade and they miss that trade, that is unforgivable, Jack. Because they're getting paid to do the trade, right? They're getting a basic to make sure they don't miss these trades. And that's when I get agitated, because that's when I start asking the question of my traders, are you on board? And they say no. And you say, right, piss off then, mate. Piss off. I was expecting a $10,000 bonus check from that trade. Where is it? You'll bloody well make good on that $10,000, right? But in the retail space, there's challenges. There's challenges to each of you guys to try and make sure that you've got the time and the space to be on these types of trades. And I get that. I understand that it's one of those things, especially if you've got a partner like Seamus. Seamus's partner lets him do feck all. Demands, lots of demands to do stuff. And because of that, that obviously has an impact on certain trades at certain times of the day. So you've always got to remember that everybody's got demands. Everybody's got certain things that cause them to miss trades, and you just can't get agitated. You can't get agitated with your partner because of it. That's the worst thing, because then you start having arguments for no reason. And you've just got to try and be accepting of the fact that you're going to miss opportunities. And whilst I might shout and ball and all that, it's because that's what I'd be doing to the guys in an actual full-time desk. If you're at your desk and you miss it, you'll get the same bloody shout. You'll get the same smash around the face. You know what I mean? Because you've just cost me a big bonus check. And we don't like missing the big bonus checks. You guys would be exactly the same, wouldn't you? If we managed to get Wemo running and Wemo missed the big turn in the trade, you'd all be shouting, "What the hell happened, Ray?" I was expecting Wemo to get us a big trade there. I was expecting to hear back that we've just made $1,000 each. Yeah, but you know what? I had to put my socks away, Jack. I had to put my socks away. You know what I mean? You'd be saying, "What the, but, but, what the hell's wrong with you? You're an idiot." And I'd be getting bald at guys. Bald. Bald! Shouting from the top of the rooftops. This guy's rubbish. Anyway, welcome in, by the way, guys. Welcome in. We've been discussing Brady in the Super Bowl. We've been discussing the US draft as a process. We've been discussing limit order books and liquidities. We discussed a lot, but we've been specifically discussing some huge opportunities in that gold market, which have turned out to be absolutely fantastic opportunities to trade against. So I hope you're all good this morning. I hope you're all ready to rock and roll. We're showing the difference between the different ways of looking at limit order books so you guys can understand this process better. Looking at Collins' limit order book against the MZ pack and trying to understand a little bit about the types of things that can happen. And we've kind of shown a couple of trade ideas. And we can obviously look at that in terms of trade narratives. And we can look at, we talked about the bids and the offers that were showing up in certain places on the likes of the Dow Jones. And obviously inside that narrative, we can start to recognize where the good trades are. We also pointed out this gold trade as it dropped below a price of 1840s. As it dropped below 1840s, we started to see and recognize the change. We started to see and recognize the change in the order book at that point. We started to see where the opportunities were and what the opportunities were. And we just highlighted a couple of things that were visible from limit order book narratives, helping us to understand the types of information that we can have on our screens at the same time, and they can help make decisions. That's what we were talking about in real time on the Dow Jones earlier. So it's been a good day. Some of the narratives from last night's tweets have been fantastic. We were talking about short bonds from last night. We talked about that. We got a brilliant response to that trade. And the good news was we had a few people on board. We talked about it from the tweets. And that's the trade. So we talked about it over here. Into the overnight session, we talked about selling the top edge bond. And that's the trade we got this morning. 7 o'clock, 8 o'clock, London Open. Since then, when I came into the room around about 10:30, it was sitting around about 22s. At this point here, I said, I think this could do as much as $1,000. And since then, it's traded down a low print of 7. We talked about selling the pullback. It came very close to that RGL level. If you drew it down at the bottom edge there, it actually touched it perfectly. And you may have decided at that point to get the short trade on. I don't know if Reeve took the trade at that point or if Phil took a trade at that point. But you can see we took out that level 2 liquidity right there. And there was a nice opportunity to rejoin a little bit of volume at that point. It's a great trade because you would have probably have taken some nice profits on this downtick because of the break even started to work against us just a tiny bit, just there. And obviously at that point there, you can see that if you took profits there, your intention would be to try and sell more into the top edge. We sold more into the top edge, and we've had this brilliant response to that sell-off. It's a good trade, isn't it? Now you might say, yeah, it's a good trade in hindsight, but there's nothing about hindsight about this trade, isn't it? Nothing about this trade is hindsight. From the start of this trade to the end of this trade, we've been discussing it in the classroom, and we've been tweeting it in the tweets last night. This is the tweets last night, so you can see that that's what we were talking about. Look. The tweets from last night, we discussed real yields. Yields closed way off the real yield, suggesting lots of buyers of yield were still to come into the trade, putting lots of sell pressure on bonds and upticks. What does that mean to you? It means you start watching top edges for sell pressure. We want to ensure we don't see oil prices dropping to keep this pressure high on the short bond. Oil prices didn't drop, they rallied, which increased the sell pressure on bonds. Bonds, last night, in line with real yields, you should currently be short. Very happy with your current position, very happy with your current position. And then this morning at 9:40, a very quiet morning so far, only traders in line with last night's tweets, selling bonds at highs, 3 trades so far, small winners at that point, small winners. We then came into the room and we started to look at those short bonds. And I said to the guys that were in the trade, I says, I think we should be looking at around about $1,000 trade here. And the price obviously traded down to 0.7s from a high print of 0.1s. We're not quite $1,000, but not a million miles away from that $1,000 golden ticket. Bearing in mind that my last trade we talked about was at 9:40 at that point. Selling bonds at highs, 9:40 this morning. From that tweet onwards at 9:40, you had opportunities to play into this, didn't you? So there's 9:40. This is the 9:40 tweet at that point, right there. So we were still selling bonds. You can see that the bond continued beautifully to carry on through that process. Absolutely no danger of us getting any difficulty in that trade. And that's how easy trading can be. But it can't get any easier than gold. Take a look at gold from last night's rocket ship. Now we've obviously got the Japanese bullet train. This was as close to a trade as you're going to get to the Japanese bullet train. Take a look at this, guys. We've told you before that there's the Japanese rush at 1 o'clock. This is it right there. 1843 wholesale. Big pop to the upside. Leaves this print now on your screens. Massive print opportunity now on your screens, doesn't it? A Marabuzo against that is halfway through the candle. So you've now got a buy zone. So what happens? The price pulls back into the Marabuzo. You get your first opportunity. If you were not taking the first candle break, you get your first opportunity to buy gold. What happens? The price trades back down. You start watching your liquidity order book. You can see that the volume is declining significantly. A little puff of volume, and off she goes again. Price trades back down again. Big puff of volume. You're back in again, and off she goes again. It never goes through. It never goes through the rocket train's buy side, sell side level, does it? Never once. And what happens next is that gold makes this incredible gain without even testing the red zone. Makes this incredible gain in the overnight session, and everybody goes, damn it. I so wanted to do some nice easy trading today. And it just went from 43s to a high print price of 56s for $1,300 a contract. $1,300, guys. Straight line, not even tested, not even stopped out in the overnight session if you got in at that 1 o'clock level. Usually we've got to do a little bit of work to get into the right trade. 2 or 3 trades to make sure you're on the right side of the line. And that's okay, we can live with that. Sometimes it doesn't kick off, but on this occasion, this was genius. Fortunes made in that trade. Into the top edge, I was talking about this trade this morning. Look at the euro, guys. What the hell even is that? one of the biggest opportunities to sell top edge euros you've ever seen. And it wasn't alone, there was massive big block orders up there as well. So you had limit orders going short, you had block orders to lean against, you had an alpha that was collapsing into a huge puddle at the bottom edge. And you had a top edge price to deal against. It wasn't some average price. It wasn't some difficult decision about where to go for the sell trade. It was also top edge, which made it very easy. You swept the stops, and then all you had to do was get the sell on. And sure enough, the sell absolutely obliterated the downside to the tune of $2,000. So from last night's buy for 1,000 and this morning's sell for 2,000, your gold is now $3,000 a contract better off on a single contract basis, guys. Crazy, right? Crazy good, but crazy. Absolutely.